completely confidential. And if you have private insurance, there'll be little to no cost to you. Even if you've already been to treatment, give us a call. There's no need to let drugs and alcohol ruin your life. Take the first step now. Call the Addiction Rehab Specialist at 1-800-417-7740. That's 1-800-417-7740. 1-800-417-7740.
I built my first backyard fort when I was about 5. A real beaut. I fell asleep in it, standing. My parents scooped me out. I wasn't about to abandon my post. Now I make homes comfortable with a little heating and cooling flair. I'm Marty. I hope you feel comfortable calling us to fine-tune your fort.
Comfort is always on call. Emerald Heating and Cooling.
WBEN First Alert forecast calls for a few morning flurries, and we'll see a mixture of clouds and sunshine, but it will be quite cold today, a high of just 21 for the afternoon. For tonight, mainly clear and chilly, the low dropping all the way down to 10 degrees. We'll start tomorrow, but warming up throughout the day. Lots of sunshine with a high of 37 to close out the weekend. An even milder day as we get into Monday. It'll be mostly cloudy with a shower or two around, but a high of 55. With the WBEN First Alert forecast, I'm meteorologist Courtney Spamer.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Everybody, this is the Tax Lady, and this is our hour to talk taxes, and we sure want to help you. I mean, tax season's in full swing. I think you're getting all of your statements from your brokerage. The 1095As and Bs and Cs are all out. The IRS is starting to release refunds from people with children and earned income credits, so things are really moving forward. Join in studio with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. Isn't it good to be out?
Yeah, it's cold, but I'm not going to complain because we have nothing to complain about this year.
We've had a great winter so far, I'll tell you that. We wanted to talk, and again, we want to answer your questions. 8030930, 8030930, star 930 on a cell phone. We wanted to kind of address the sale of stock that happened when First Niagara turned into Key Bank, and people are getting from ComputerShare the 1099Bs, and they don't know what to do with them. So we kind of thought we'd talk today. We're going to focus on Schedule Ds, what a Schedule D is, what goes on a Schedule D. Is it a good thing? Is it a bad thing? And we want to help you to walk through that. Again, if you have any questions, 8030930, 8030930, star 930 on your cell phone. And again, all of our offices are open Monday through Friday, 9 to 9, right, Chris?
Yep, Monday through Friday, 9 to 9, Saturday, 9 to 5. Our two mall locations, the McKinley Mall and the Niagara Falls Factory Outlet Mall, are open mall hours, so that means on Saturdays they are open till 9, and on Sundays they are there too. McKinley Mall 11 to 5 on Sunday and 10 to 5 at the Niagara Falls Factory Outlet Mall.
Right. Okay, so Chris, tell me, if you have a capital gain, is that a good or a bad thing?
Well, that is a good thing.
That is a good thing.
For two reasons.
Absolutely right. You know, so many times people say to me, oh, I don't want to get capital gains. I want to get capital gains. So many different types of income are taxed differently. Like your wages are taxed differently than a sale of a capital asset, long-term capital asset. A capital gain is a tax break to you.
Right. You made money, but you're going to pay at a reduced rate.
Right. And so if you have a capital gain, that's a good thing. If you're in the 15% bracket or lower, what will you pay, Chris?
Well, to the federal government, you pay absolutely nothing.
That's exactly right. So you pay 0%. So you cannot beat that. And those of you that say, I just don't want to put my qualified dividends on the Schedule D for computation, you're really just shooting yourself in the foot because you're basically paying at ordinary income when you could pay at 0%.
Right,
So
because
if
you're...
So if you had $1,000 in qualified dividends, you might be paying $150 in taxes when you pay 0.
Right, because your qualified dividends count as capital gains, so you get the reduced tax rate for them.
Yeah, so if you have any questions about anything tax-related, anything on stocks, bonds, selling houses, inheriting houses, if your mom gave you the house, life estate, anything like that, 803-0930, 803-0930, star 930 on a cell phone. But we have a call, and why don't we talk to Mike, who's been hanging for a while. Mike from Hamburg. Hi, this is Esther. How can we help you?
Hello, Esther. I got the perfect question for you then.
Yeah.
I have a 1099-B in the mail, and it shows, of the stocks that got sold, it shows a code of W, a wash sale loss. And I don't know how to transfer that onto Form 8949. I did this last year, and it worked out good, but I just didn't have that code on there last year. So how do I do that and then transfer it to Schedule D?
All right, Chris, my earphones are acting up, so I got that he's got a sale of stock with a wash. Reiterate what he said.
Sure. So you sold the 1099-B says you sold stock, but there's for a loss, but there's a wash sale. Correct, there, Mike?
Right.
Yes.
Okay. So on the new 8949, have you put in your date of purchase, date of sale, your sale price, and your cost basis? The column right next to it is a code. They want to know if something's going to affect the basis. So for a wash sale, believe it or not, the code is a W.
Yep.
Right.
Okay, so then you put the W there, you put the dollar amount in the column to the next right, which is the dollar amount column, and that will adjust your basis to decrease your loss because the wash sale, you're not allowed to claim that loss.
Because it was bought back within 30 days.
It's
And that's why it's a wash sale.
Because it's disallowed, how do I write that down?
Well, like Chris was saying, on the 8949 is where you're going to put your date purchase, your date sold, the gross sales price, the gross purchase price, then a W for the wash amount, and then that adjusts the gain or loss on the final column.
Okay. But because it's disallowed, how can I put that down on Schedule D?
You don't get if it's a wash sale, you don't get the loss.
Yeah, the 8949 takes care of the basis adjustment. So right. you record that there. Then on the Schedule D, you record after the wash sale.
Okay.
So the 8949 is a middle step.
Right.
Like in baseball, you can't go to second base without going to first base first. So you have to do the 89 first, 8949.
Why don't we give him some let's say that he sold it for $10,000, Chris.
Okay.
And he bought it for $9,000, and the wash amount is $1,000. Then that adjusts his cost basis to $1,000, which means he has no gain or loss, right?
Correct. So then he would put on the 8949 the sale price of $9, cost of $10, a W, $1,000. So that's your 8949. On the Schedule D, you will just put sale price $9,000, cost basis $9,000.
Right.
Okay, so then I wouldn't write down anything for gain or loss?
Right, because there would be no gain or loss because the wash sale would zero it out in this example.
Now, there may be a lot of trades, and only one of the stocks that you sold was a wash. That's only going to adjust the cost basis on that one stock.
So in Form 8949, on column H, I would put nothing?
Well, 8949 is you have your sale price, so you list your sale price. Then the next column you list the cost basis that your Schedule B is saying your cost basis is.
Okay.
Then you put the W, then you put your wash sale. Okay? Then on the Schedule D, you put your sale price, and then your adjusted cost basis after your wash sale.
Right.
Okay.
But here's the thing. Why don't you go to a tax professional who can help you with this? Because it sounds like you can mess yourself up big time. So that's what I would do. Or go online and read at least. So there are examples online that'll maybe clarify this for you.
Okay.
Okay?
Thank you.
All right. I'm Esther Gullius, the tax lady from EG Tax. 803-0930. 803-0930, star 930 on a cell phone, and it really is confusing. Let's kind of go step by step through this. The 89-49, Chris, like you were saying, is like getting to third base. You got to go to second base. So it's basically a worksheet, more or less, right?
Right. Exactly.
So on the 89-49 is where you're going to say there's a basis adjustment here that's going to ultimately affect the gain or loss on the Schedule D. But remember, the Schedule D does like three things. First of all, it can adjust the basis. Secondly, it's where you report your gains and losses, short and long-term capital gains. And thirdly, it's where you do your tax computation.
Right, on the second page of this guy. Yep.
Right. So, all right, so the whole thing is if you get a 1099-B from your stockbroker and there are trades on there, you have to do the Schedule D or else you're going to get a letter from the Internal Revenue Service.
Right, because they don't look at the basis. They just look at the sale, and they'll send you a bill, and it could be short. They'll turn it to short term, not long term, and they'll send you a bill for whatever tax bracket you're in.
That's exactly right. All right, I'm Esther Gullius, the tax lady, 803-0930. 803-0930, star 930 on a cell phone. We're going to take a short break, and we'll be back on the other side with your questions. I'm Esther Gullius, president of EG Tax, better known as the tax lady. Did you know that if you're self-employed, you can set up your own pension plan? True. You aren't limited to the IRA. You can still use the IRA if you prefer, but by setting up an SEP, you can contribute 25% of your net profit up to $53,000. That sure is better than $5,500. Other pension plans are available too. Needless to say, pension plans vary with your tax situation, and EG Tax can help. EG Tax has 33 area offices to serve you. You can call us at 632-7886. That's 632-7886. Visit us online at egtax.com or stop in at any one of our branch offices. We have licensed, qualified, and experienced tax help eager to make sure that you get everything that you have coming to you. This year, come join our family.
The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil. Attention real estate investors. Thinking of selling investment property? Pay no tax. Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists. For a free consultation on how to pay no tax when selling investment property, call 675-1500 or online at rjgullo.com. That's 675-1500 or online at rjgullo.com.
Hi, this is Esther, and let me tell you how great it is to have an insurance agent like Nationwide's Bill Barber. Bill's 40-plus years experience has saved me money on my premiums and potential claims. Have an insurance question, problem, or crisis? Bill will work with you personally without calling an overseas customer service number. All I can say is whenever I need someone on my side, I'm glad to have Nationwide's Bill Barber.
For all your insurance needs, call the Bill Barber Agency at 688-2199. Call 688-2199 today.
Nationwide is on your side.
Read the news online at WBEN.com.
Those pretty faces always make you stand out in a crowd, but someone wanna pick you from the bunch. One glance was all it took. Now is a must delay for me to take a second look. Oh, baby,
Well, we're back from EG Tax. We're here to help you with your questions. Give us a call here in studio, 803-0930, 803-0930, star 930 on your cell phone. Okay. We're talking Schedule Ds and how complicated they can be and the importance of them. We're here to help you with whatever tax question you may have, whether it's Schedule Ds or anything. Just give us a call here or during the week at our offices, our corporate office, 632-7886. We're there all the time this time of year to help you. You can go to our website, email Esther at Ask the Tax Lady, and she'll answer you probably normally within 2 hours, I would say right now. And
the truth.
What a great thing to have. What an asset to have in your pocket.
All right, Chris, we're going to go back to the phones and talk from Ed in Tonawanda.
Hey, Ed.
Yes, sister. I have a question relative to the long-term care insurance.
Yes, sir.
And I know you could use the state form IT-249.
Right.
To put in a claim for the credit, and then you could, of course, try and carry it over to the next year. My question is this. Can you also use the premium that you paid for the long-term care insurance as one of your medical expenses on the federal form, Schedule A?
Absolutely.
Can you use the entire amount of the premiums you paid? Or?
Well, you can use the amount based upon your age. So there is a cap, and I don't have the figures off the top of my head, but there is a cap based upon your age. That is a deductible medical expense on the Schedule A. And then that same figure would be part of what's your computation on the state for the long-term care insurance credit.
Okay. I just wanted to know whether or not you can include that amount as a medical expense on the federal Schedule A.
Sir, you can. Yes. Yes, you can.
Okay. Thank you, Esther.
All right. You're very welcome. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on the cell phone, and we're going to go to Linda in Amherst. Hey, Linda, how can we help you?
Yes, hi, Esther. I have a question about daycare expenses for my daughter and her fiancé and their little baby. I understand that you can take off the state and federal both, I assume. The total amount, let's say they spent $8,000 over the course of the year. That $8,000 is a subtraction from your income on the state and federal. Is that right?
No. It's a daycare credit. It's a Form 2441. There are caps on the total amount that you can take. It is a credit, so it reduces the tax liability anywhere from 20 to 30% on the federal, and the state of New York, it's a refundable credit, but it is a credit and not a deduction. Chris, why don't you explain some of the cap amounts for her?
Sure. For one child in daycare, it's a $3,000 limit. If you have two on the credit, so even if you pay $8,000, the IRS is only going to say we're only going to look at $3,000. So whatever else you paid, that's not going to help you on your tax return.
Really?
Yep.
That's terrible.
Oh, it is. I mean, daycare, some people are paying higher cost for daycare than they do for private high school.
Oh, I believe it. I mean, she goes 3 days a week, and, it's like, I don't know, about 160 or 170 for 3 days.
Yep.
Right, but unfortunately, that it's not a deduction; it's a credit. Or fortunately, it's a credit. So if your daughter and her fiance are lower income, they could get a 30% credit of the $3,000 or $900 savings. Now, if they were in the 10% bracket, at 10%, if it were a write-off, they would only save $800. So the credit is better than the deduction, depending upon what your taxable income is. So it is a credit, and if you have 2 children, Chris, what's the cap?
Only $6,000.
Right.
Really?
Or more. 3 or more children.
Yep. 2 or more, it's only 6. Yep.
That's such an unfair law.
Yep. And one thing they might want to do, Linda, depending on their income, is look to see if one of their jobs offer a flexible spending account for daycare, because that will be money that comes out of their pay before taxes, so it will reduce their gross pay, their Social Security pay.
Yeah,
So
I don't believe they do.
okay.
Actually, because they're not legally married.
That doesn't mean that they don't have a flexible spending account where they work.
Right, but I don't think that they do at either one of their jobs. What I was going to say was basically one of them takes this money for her daycare because they don't file together; they file separately.
Right. Well, they don't both get to claim her, and they don't both get to claim the daycare credit.
Right.
It would be one person that claims the child. May I ask their income, approximate her income or his income?
Well, I would say together. I believe he takes hers as the deduction. Probably about 35 to 37,000.
Each one or collectively?
No, each one.
Okay, so they're going to get an earned income credit, a child tax credit, a daycare credit, and of course they're going to get on the state of New York the same thing. They're going to get the Empire State. How old is the child?
18 months old.
Okay, so they won't get the Empire State credit, but they will get the daycare credit on the state of New York as well, and an earned income credit on the state of New York as well. But only one person can claim the child for the earned income credit and the daycare credit.
What is the earning limit for the daycare credit?
There is none. There's different percentages, and once you hit, I want to say 35,000, you get the lowest percentage of the credit, which is 20%. But you can make $2 million a year and still get the credit for child care.
Right.
Mm-hmm. Okay.
Okay. Does that help?
Yes, it does. It's still a little confusing, but I think I understand more. Thank you so much for your time.
Thank you very much, Lynn. Esther Gulius, the tax lady from EG Tax, 8030930. 8030930, star 930 on cell phone, kind of talking about Schedule Ds or any other tax matter that you would have. Give us a jingle. All of our offices are open 9 to 5 today. The mall is open till 9. Tomorrow the malls are open. Those two malls are open, one in McKinley and one in Niagara Falls from normal mall hours. And then all next week all of our branch offices are open 9 to 9 Monday through Friday. So if you have any questions, and you can go to our website at egtax.com, and you can email me, and I'll be very happy to get, like Chris was saying at the end of the break, we're very happy to help you with your tax questions. The thing is, if you do it wrong, you can be costing yourself a lot of money. And so if there's ever any hesitation, you should have somebody look at it professionally. I don't care if you don't use EG Tax. You want to make sure you get somebody professional look at it because it can be very confusing. Just like this last lady thought it was a deduction. It's not a deduction. It's a credit. And deductions and credits are handled differently. Right, Chris?
Definitely. And one thing also, that the loss for the child care, I don't think that's changed ever since I started, which has been 30 years. I think it's always, it did a little. It went from $2,400 to $3,000 per child, but really that's about it. There's been no changes.
And that's something Trump is talking about because his daughter is very keenly aware of how difficult it is to work, and the daycare expenses are just astronomical. Okay, let's go back to talking about the Schedule D, Chris. A qualified dividend, what does that mean?
A qualified dividend means you meet the time frame of 60 days before, 60 days after of holding the stock. But the most important thing it means is that you get the reduced tax rate. You get it as a capital gain, which means, like we said in the beginning of the show, if you're in the 15% bracket or lower, you pay no tax on that qualified dividend.
That's right. But many people that don't know what to do with it, they just ignore it. And so that means it's going to be taxed at whatever your tax rate is. So if you had $1,000 in qualified dividends and you're in the 15% bracket, you're going to end up paying $150 in taxes you shouldn't pay because it needs to go to the Schedule D and the computation needs to be done on the Schedule D. The other thing that I wanted to talk about is short sales, like we talked about before. That's when you sell a stock at a loss but buy that stock back before 30 days.
Right, the wash sale.
The wash sale, that's right. the wash sale. And so that would mean that loss is not deductible.
Right, yep. Until you sell that stock again. You entirely sell that stock again and not buy it back within 30 days. I mean,
other capital assets would be property, right, Chris? Like your personal home. Like, let's say Grandma is giving you her home because she's getting older and she thinks that she might have to go into a nursing home and she doesn't want to lose that. If Grandma gives you the home, then how does that affect your tax return?
Well, if Grandma gave it to me, it means that her basis, what she bought it for, plus her improvements, becomes my basis. So if Grandma bought this house back in 1943 for $5,000 and put $20,000 in it, the basis is $25,000. That's my basis. So if I turn around and sell it for $150,000, I have a gain of $125,000 I got to pay tax on.
Now, what if Grandma left it in her will to you?
Well, that's a different story. That's an inheritance. That means I get a stepped-up basis for what that house was worth when Grandma died. So if Grandma's house was worth $150,000 when she passed, I sell it for $150,000. I have no gain, no loss. I pay no taxes.
Which is so important because many times, probably for most people, the largest asset that they have is their personal home. And sometimes you're sitting around the dinner table and you think, I'm just going to give this to my kids. And that's a wonderful thing to give it to your children. Unfortunately, if you do give it to your children without thinking out the consequences, your children can end up paying a lot of capital gains that they could avoid. Now, one of the ways they could avoid it is through a life estate.
Right, where you put your kid's name sort of on the title, but it's your house still. You get all the star benefits from being a senior. You get all the benefits. The kids can't turn around and sell it for you. Instead of going into, oh my God, the word I just totally lost when someone dies, probate, it goes directly to the kids. So they get the stepped-up basis.
You can't be having a senior moment, Chris. But it's true. It goes through your will, so that means that the kids would get the stepped-up basis, and the kids wouldn't have to pay taxes on the gifted amount like Grandma would have done in the first example. So this is really important that you have this conversation. So if you're going to be thinking about gifting your property, that maybe you would consider the life estate as opposed to the gift.
Right. And we got to take our hard break for the news right now. So we will catch everybody else on the other side. And
8030930, star 930 on your cell phone. See you on the other side of the news.
The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil.
People often ask me or my coworkers about how their investments are going to impact their tax return, and we always would say, consult your tax advisor. Well, I have great news.
This year, EG Tax will have one of our senior tax accountants, Dana Bobowitz, EA, who will work inside the Financial Guide's office on Main Street in Williamsville.
Together, we will be able to meet all your financial needs in one appointment.
We just made it a lot easier for you to come join our family.
Call 633-1515. That's 633-1515 to make an appointment.
Investment advisory services offered through Blackridge Asset Management, LLC. Securities offered through Peak Brokerage Services. Member FINRA SIPC. Blackridge Asset Management, LLC and the Financial Guys, LLC are not affiliates of Peak Brokerage Services. Offices located at 6631 Main Street, Williamsville.
I'm Esther Goulias, president of EG Tax, better known as the Tax Lady. Did you know that once you reach age 70 and a half, the IRS demands that you begin withdrawing from your pension? And failure to make those required minimum distributions can cost you plenty. There is a 50% penalty for failure to make your RMD. If you were supposed to withdraw $10,000 but you didn't do it, the penalty is $5,000. However, you may be able to push off the first distribution up till April the 5th of the year following your 70 and a half mark, as long as you take a second distribution in that same year. So if you turn 70.5 in August, you can wait until March 31st of next year to take the first withdrawal, and again before December the 31st. EG Tax has 33 area offices to serve you. You can call us at 632-7886. That's 632-7886. Visit us online at egtax.com or stop in at any one of our branch offices. This year, come join our family.
WBEN 930 AM, as Buffalo as wings.
I don't know about that. I could see people being very superstitious about doing their taxes. And that's why we're here to help you. If you are, you don't know what to do, EG Tax is right in your backyard to help you. Give us a call here in studio, 803-0930. 803-0930, star 930 on your cell phone. Every Saturday, we're right here to help you. During the week, rest of the week, we're at our office at 632-7886, 632-7886 at our corporate office to help you. And whatever questions you have, give us a call. Don't be shy. We want to help you.
Hey, Chris. Also wanted to mention our TV show on Tuesday nights.
Oh, yep. Let's not forget WBBZ every Tuesday at 6 o'clock. We're on BBZ. Great questions there also from all our viewers and listeners. So you'll learn a lot.
So BBZ on Tuesday nights, Ask the Tax Lady on Saturday from 3 to 4, and we want to help you. You can ask the tax lady at our website at egtax.com. So let's go to the phones. Poor Bobby's been waiting. 803-0930, 803.
Hi, thank you. I'm a first-time listener, first-time caller. I caught your show when I was coming back and that stuff. My question is, my daughter this last year, she's lived with me over 9 months in my home. She's 20, she has a kid, and I was considering on just claiming my daughter on my taxes as far as a dependent. And she wound up getting a W-2 back from her job. And she only made, because it was part-time, a little under $300. So there was only not even $20 in federal and not even $10 or whatever in state and whatnot. My question is she'd already gone through a process as far as her biological father of the child, and come to find out that individual wasn't the father, and they discovered who the father actually was, and she was going to go ahead and do her own taxes, and she adjusted everything from the birth certificate and Social Security card, but IRS, come to find out, the biological father decided to go on his own free will, get my daughter's son's Social Security number, claim him on his taxes, and now it's suspended it because the original name that was on the birth certificate to the name that is actually supposed to be for the biological father is not the same. She's already gone through the process to correcting that. But the deadline basically being April 15th, if she doesn't have it to where it's adjusted the way it should be, seeing that the IRS is already suspended, is she still capable of possibly being able to do her taxes before the deadline, or is she technically possibly going to have to wait and do an amendment next year if she gets another job?
All right, so let's go all the way back to the first part. Your daughter lives with you. Your daughter made $300, and she has a child that also lives with you. Is that correct?
Yes.
And the child that lives with you is your grandchild as well?
Yes.
Okay. And if I'm understanding this correctly, the biological father went ahead and claimed the child on his return, but it rejected because of the wrong name control match. Is that correct?
And she also did not go ahead and authorize him with an 8332 form. He just did it on his own.
So there was a reject. If there is a reject, that means that child has not been claimed by anybody. You, though, are the grandfather, and the child lives in your home, and your daughter, who's over the age of 19, made less than $4,050. So you can claim the daughter and the grandchild, and if you know what's on the Social Security card, I would submit that electronically, and it should go through. In the event that it doesn't go through because of a name control mismatch, send it in as a paper return, and it'll take a little longer, but it'll go through because the mother is the custodial parent, and so she has the right to claim the baby. Anybody listening, if the child lives with you and you haven't signed Form 8332, even if somebody else claims the child, go ahead and do the return as a paper return and submit it. It takes a little longer, but you'll win. Right, Chris?
Do you have any kind of paperwork like address proof?
Yep, you would. If I were you there, Bob, I would get a letter from the doctor's office saying that your address is the one on record where your grandson lives.
Okay, thank you very much.
But if he submits it electronically, because if it's rejected, it should go through.
Right. If he had the right name, it should go through. But if he's sending everything in paper, it wouldn't hurt to send everything with it.
Then you would send that proof. And if you need any help, just give us a jingle. We'll be very happy to help you. But just because somebody who is not authorized to claim the child has done it, that doesn't mean that you, who should claim the child, should give up your rights. Go ahead and file the return as a paper return.
Yep.
Okay?
Yes, he's all good.
Okay. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. And we have Jeannie who's been waiting. Hey, Jean. Hello, Jean.
Hi. I heard earlier a woman was asking about tax credits for child care, and I'm just wondering if my employer pays for, as part of my employment, my child care. Is that something that I would get a 1099 for?
No, it's just a fringe benefit for you, and it's a wonderful thing.
Right. Okay. So I don't have to worry about that. I'm going to get a tax liability for that.
Wonderful thing, boy. Whoever your employer is a fine organization.
Right. Okay. Thanks very much.
You're very welcome. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930. It's star 930 on a cell phone, and I think we have Jim waiting too. Right?
Yep.
Hey, Jim. How can we help you?
Hi, I'm helping a friend out. And she last year she had used the marketplace for health insurance.
Sure.
And I guess when I was helping her with the tax, it looked like she was going to get $1,400 back. But then at the end, they subtracted $721, and then I've been going over the 8962, and it looks like maybe her income was too high to get the premium tax that she was given.
Okay, so here's what happens. When people sign up at the marketplace, they take a guess at what they think their income's going to be, them and the dependents that they have on their tax return. It's a guess. The day of equalization is when you do your tax return, where there's real numbers. When you actually do the premium tax credit, you take a look at whether you got too big of a subsidy or too small of a subsidy. If you got too big of a subsidy, that means you guessed too low and you have to pay it back. If you got too little of a subsidy, then they give you a refund. That's called the premium tax credit. So it looks like your daughter had underguesstimated, and so she's going to have to pay back some of it.
Oh, I see. Okay, thanks a lot, Esther.
You're very welcome. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And I want to talk about, when we're talking about Schedule Ds, Chris, the 1244 stock sale is kind of an anomaly on the Schedule D, right? So you get to take a loss up to $100,000, whereas the rest of capital gains, you can only take whatever your other gains are, dollar for dollar, plus $3,000. But on a 1244, that's not the case.
Right. Yeah, people are probably going out there, how can I get this 1244 stock? That sounds pretty good. I get to take all the loss. But that is if you're a small business owner, meaning you're a C corporation, not an S corporation, but a C corporation, and you've been investing all this money in your business. The losses have been hanging out there in space because you're not allowed to claim it every year. And now you say, well, I'm done losing money. I'm closing the shop. The government lets you claim that loss, all those losses, that 1244 loss, on your tax return on that final year.
That's right. And the whole thing is, or maybe you were an investor in a small business. And they keep telling you, we're going to do better next year, we're going to do better next year, and you were maybe one of the founding members and you're a shareholder, you can take, that's called 1244 stock, and you can take losses up to $100,000 if you're filing a joint return, $50,000 if you're single. So though there are all kinds of little things when you're selling assets that people don't know about. Like, for instance, when you sell a rental property, technically that is a 4797 sale, not a Schedule D sale, right?
Right. And you have to recapture all that depreciation that you took or didn't take. They don't care. They're going to say you did. And so that's going to reduce your cost basis. So where you might think you broke out even, you have a gain that you have to report on the 4797.
That's exactly right. And that's why we were talking about Russ Gullo doing exchanges. Because if you do a tax-free exchange, and a lot of people think, oh my gosh, I watch my clients' eyes like glaze over when I start talking about it. And it's not hard. You just if you decide to sell your property that was rental property, which would have to recapture all the depreciation, you basically get it sold, let somebody like Russ Gullo know that you want to do an exchange, find another property that you want to exchange into, and then basically he holds the title, transfers all the money to the new property, and you don't pay taxes.
Exactly.
Right?
Yep.
Okay, let's go back to the phones, and we'll talk to Mr. Sam. Hey, Sam.
Hello, Esther.
Hey, how can we help you?
I had an exceptionally large income this year, and I was wondering, is the averaging still available?
No, sir, that's been gone a long, long time. I would say 20 years now.
Here, I got part payment, and I had to do a Schedule E. I'm assuming I have to do the Schedule E this year. Is there any tips on how I can decrease the taxes on it?
Okay, so you have rental property?
Yes, I rented a piece of my land. It's on a lease rental for 20 years.
And you've taken the cost of the property taxes, right?
I've just taken the lump sum payment. They were going to give me so much a year, but I decided to take the lump sum.
Okay, so you're saying that you didn't rent it, you sold it.
Well, you took the 20-year lease in one payment instead of over 20 years.
You did. Okay. So that you just would reduce it by any actual expenses that you incurred this year, such as the property taxes. If you had an attorney involved in negotiating the contract, that would be an expense. But if you front-end loaded it, do you have any wages at all, Sam?
No, I don't.
That would be about it, because it's not earned income, so you can't put it in a pension plan. You just would have all your actual expenses this year, and it'll just be taxable.
Okay, so I just have to calculate how much the tax would be on that piece of property.
Well, yeah. How old are you there, Sam?
77.
Okay, so what it's probably going to end up doing is making your 85% of your Social Security taxable there, too.
Yes, it did. I did a rough estimate on the 1040 on paper so far, and I came out with a figure that I owe them about $15,000.
Yep. For everybody's information, including Sam, if you're going to do something that's going to be pretty significant, I would say over $10,000, whether you want to take money out of your pension plan, take lump sum on a lease payment up front, give EG Tax a call, and we'll work it out with you and give you some alternatives so that this doesn't happen. But pretty much, Sam, that's ordinary income on page 1 of the 1040, as you well know right now, and it's going to be taxable.
Okay, thank you for the information.
Thank you, sir.
Have a good day.
You too. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Chris, you got any caveats you want to add to that?
Oh, they always do say a bird in the hand's better than two in the bush, right? So
for sure.
So he took his money because who knows what could happen 5 years down from the road from now. So
that's exactly right. That's exactly right. But had he spread it out over the 5 years, like you said, you're gambling with what could have happened.
Yep.
Anyway, all right, let's go back to the phones and talk to Linda. Hey, Linda, how can we help you, ma'am?
Hi, Esther. I inherited all my father's assets. He died last year. One of the assets was a home, but I'm not on the title. Now, can I legally give that house to my son? What do I legally have to do? And should I put the whole thing into a life estate situation? Would it be
up here? All right. So you inherited it. You weren't on the title, so that means you get a stepped-up basis. Okay. So that's a good thing.
I don't know what a stepped-up basis means.
It means that how much do you think it was worth when Dad passed?
How much? At least $100,000. He only bought it for $18,000.
Okay. So that means that as far as the IRS is concerned, you paid $100,000 for the house. So if you sell it outright on the general, put it with a realtor and sell it for $100,000, you have no taxable gain.
Right.
So you could walk away with $100,000 in cash.
Okay, well, what if I just give it to my son?
But why do you want to give it to your son? So you want to give your son $100,000?
Yes.
You want to?
Yes. What?
Okay. Well, if you give your son $100,000, you have to file a gift tax return, number one. And number two, that means that your son then gets the asset at the fair market value when you inherited it, so he'll get it for $100,000, but you don't have use of the money. Now, if you wanted to give him the money, that's great, but here's another thought. You might want to sell it outright, take the cash, and give him something down as a down payment. For instance, you could give him $14,000 a year, and he could get a mortgage. But if you want to give him the $100,000, then you're going to have to do a gift tax return. You can gift him the house, and that's a wonderful thing, and you're a wonderful mom.
Okay. No, he wants the house, but I don't want to.
You want to give him $100,000 is the question.
Right. Yeah, that's what I'm going to do. Give him.
Yeah. Well, the thing is, Linda, what you got to be careful of too is, and I don't want to say, but if something happened to you and you went into a nursing home within 5 years,
they would. Yeah. Well, I'm counting on that not happening because I'm still in my 60s.
Yep. Well, I'm just had to throw that out there for people listening because that's
very important. What Chris is saying is correct because if you do, there's a 5-year look back, and none of us know what's going to happen for tomorrow. So that's part of what you might want to consider.
One thing you may want to do, Linda, is sell the house to your son, have him get a mortgage out for $100,000. He pays the mortgage, you get the $100,000, then you gift him $14,000 a year to put down to make that big payment on his mortgage.
Yeah, I realized that. I thought of that too, but it's complicated. He wants the house. He doesn't live close to the house, but I think they're eventually going to move into the house,
You're going to keep it empty?
I don't, well, the point being is I don't know what they're going to do with it. You know what I mean? I didn't want to get involved in that part of it.
Okay, well, just remember, it's a lot of money.
Yeah, I'm aware of that. So I have to do something, file a gift tax?
You have to do a gift tax return, and if you give them the house, you give them the house. Say goodbye, money. So it sounds like you are anticipating what he wants to do. Maybe before you do anything and give the house to him, you need to have a real sincere talk with your son and daughter-in-law and find out what they really want to do.
Well, I try to. Let's put it that way. And all I know is they want the house. I don't know what they're going to do. It sounds like they're going to move back. I don't care what they do with it. I just want to
help them.
House. Period.
Okay. Well, if you need help, you give us a jingle. There's no charge for the consultation. Okay.
Lawyer is not telling us anything about that. He says we can just give him the house. You know what I mean? And have his name put on the title.
That's correct. You can just give him the house. But then you also, under federal law, have to do a gift tax return.
I still under federal law if I do that.
It's not a big thing.
You're not going to owe any money by doing it. It's a paper form just saying you gifted an asset of $100,000 to your son.
Life estate is something different. What is?
You have to live there to do a life estate.
Oh, you have to. No, I'm not going to live there.
Yep.
It's empty right now.
Yep.
Okay. Thank you very much.
Thank you, sweetie. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 cell phone. I just want to kind of linger over this. You know, kids and situations and family, you know, they say you can choose your friends, but you can't choose your family. Not that this lady doesn't like her kids. I'm sure she does. But many times we do things hoping that this is going to happen if we do this. It's good to just have somebody to bounce something around with, you know, and that's part of what EG Tax wants to do. So if you have this kind of a situation, give us a call. We'd be very happy to help you.
And how many people out there, Esther, do things that they listen to other people, their lawyer, no offense to lawyers out there, their real estate agent, and they just do things and not realizing what it impacts their tax return.
Right. That's correct. Well, especially people that just gift an asset away. Now, this lady's going to gift an asset away, but of course she's got the stepped-up basis, so that's great.
Yep.
But if it had been a mom who gifted it to a child who paid $18,000 and it's now worth $100,000, now the kid's got an $82,000 gain that you have to deal with. So, you know, taxes are complicated, and we want to make sure that you don't overpay. All right, and let's go to Sylvia. Hey, Sylvia, how can we help you?
Hi, I'm a senior, and I borrowed $5,000 out of one of my policies.
Okay.
I got one 1099 form, and it says the taxable amount is $217.98. So plus my $574 for my Social Security, and I'm wondering, do I need to file taxes for that?
No, if that's your only source of income, is your pension and your Social Security, your Social Security is not going to be taxable because Social Security is not taxable until half of the Social Security you receive, when added to your other sources of income, exceeds $25,000 when you're single, $32,000 when you're filing a joint return. Then the excess over that figure would be half taxable. You are nowhere near that, so you can go and drink a cup of coffee and relax.
Oh, okay. Thank you so much, Esther. I appreciate it.
Great. Have a great day. All right, Mr. Chris.
Yes.
At this point in time, we're talking about houses and everything. Reverse mortgages are something that many seniors might want to consider. I know that they're afraid about losing the asset, but it really can be a safety net because it's tax-free money that people get off of a home if they're over the age of 62, and they're a homeowner, and basically the bank is going to pay them monthly or in a lump sum based upon the equity of their home. They pay off the first mortgage, and the senior gets to live for as long as they live in the house, just like a life estate, and it's a great way to get tax-free income.
Right. And a reverse mortgage, it's not for everybody. It's for somebody who's in a financial hardship. So especially with, we'll say, medical costs going up as drastic as they are. You're on this fixed income like this Sylvia just was, and she knows what her monthly expenses are. Well, now they keep going up, and she doesn't have the money. So if she owns her home, she could do the reverse mortgage and get an extra $400 a month out of her house.
Right.
To help her pay the medical bills or whatever else.
That's right. I mean, there are seniors that have maybe $100,000 mortgage right now, and they're making almost $1,000 a month in house payment, but the house might be worth $200,000. They could do a reverse mortgage. The bank takes out the $100,000 first mortgage, and then they get whatever equity is left, and they get to live there free for the rest of their life. And say to me, aren't giving away my assets?
Right.
Free living. Anyway, I'm Esther Gulias, the tax lady. We're going to go back to work. If you need us during the week, go to egtax.com. We'll be very happy to help you with your tax. Visit any of our offices next week. Esther Gulias, Chris Fabian. Thanks for listening. Bye-bye.
This is Attorney Dennis Kitchen.